Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the U.S. Markets Wrap with me, Ryan Huang. And we've got some red on the screen with stocks dipping, led by technology, as we see more pressure from technology, or rather tariff news. The S&P 500 lost 1.1%, closing at 5,712. The Dow Jones Industrial Average was down 0.3%, around 133 points to 42,455. And we've got the tech-heavy Nasdaq leading losses, dropping 2%. And some of the big names like Nvidia lost nearly 6%. Major tech names like Meta and Amazon dropped more than 2%. Alphabet lost more than 3%. Tesla down more than 5%. For more insights, we are joined by Ben Emons. He is the Chief Investment Officer for FedWatch Advisors. Ben, thanks for joining us on the show. How are you doing?
Good, thank you. Good morning. Thank you for having me.
Hey, great having you on, Ben. We've got lots to talk about because you've got a lot of news around tariffs. You've got the Fed in recent weeks talking about what's the path forward for rates as well. So let's start with what's high up on the agenda these days, the reciprocal tariffs that are going to be coming online on April the 2nd. And so far, we've got Donald Trump coming out to say cars not made in the U.S. will face 25% tariffs. So there is a lot of concern how all this could play out in terms of a wider impact on the economy, how it's going to be passed on to consumers, and how it's all going to be absorbed by the markets. What's your takeaways from what you've been hearing so far from the tariff front?
Yeah, it's certainly not positive because people are looking at this saying, it's one thing to make it reciprocal, where maybe the objective would be to bring it ultimately all the trade barriers down. Right? In the case of reciprocal, we could tell now from Europe as one example, they're planning a whole swath of retaliatory tariffs as of next week, and you probably have others that follow that example. So it isn't reciprocal, it becomes retaliatory. And that could lead to more tariffs, right? And so we're not lowering the trade barriers, we're only raising them, only making it harder, more costly. And although the idea may be good to try to incentivize investment into the United States by then having no tariff for those companies who do that, it's not going to make up for the loss that you have on all the costs that you're going to bring on to consumers for these retaliatory tariffs on all the foreign imported goods, right? And it's already happening. Import prices are already rising. People are already responding. So it's not a good situation. It's caused a lot of uncertainty and volatility.
Yeah, how much does that slow down the economy? Where are you when it comes to the expectations of whether we get a recession or where the U.S. economy is going?
So if you look at the real-time measures, then we've definitely had a quote-unquote slowdown, and some of it happens naturally in January, February. We obviously have a really awkward effect of that suddenly a surge of gold, physical gold has come into the United States for particular reasons, which has kind of distorted the number a bit, the GDP number. You strip that out, actually growth is quite slow right now, and I think it has to do with that a lot of stocking happened through imports to try and avoid tariffs, but it's more with that inventory has actually happened. It's more sitting there idle, I guess, not enough demand yet, maybe because people are uncertain. They don't know what's going to happen, and everybody's watching what will happen after April 2nd. I do not believe, though, that the U.S. economy is in a recession or is at risk of an imminent recession. For that, then actually financial markets will be significantly more disarray. But not only that, just not really good signs of that showing up yet in the data. We had PMI data out earlier this week. Also last week, some other data points all indicate actually strength. The durable goods today is volatile number, but was stronger. So if we had a recession, all those numbers would be weak. So not a recession, but there's definitely a slowdown happening because of uncertainty on how these tariffs are exactly going to impact the economy.
Yeah, Ben, we've heard for quite some time that the Fed is quite data dependent. With the tariffs hanging in the air, do you think they are starting to shift away to try to stay ahead of the curve, or can they even do so with the back and forth with all these tariff discussions?
Well, today there was a Fed speaker out. His name is Musalem. He's, I believe, from the St. Louis Fed. And he's making now more of a point about saying that the more permanent effect of tariffs that has to be watched. In other words, we get this one-time price shock that Powell talks about, but then it could become more permanent. And Trump announced today that tariffs on autos are going to be permanent. And they're not going to be taken off. And so there's something about inflation, the way it could be impacted, where, as you can tell from the consumer surveys, like the conference board that came out just a day ago, the inflation expectations are back to where the pandemic was, as of 6.2% for the next year. So it's very high. Also very indicative that the consumers expect inflation not to go away in any time soon. So that's the worry for the Fed, is that inflation stays higher, may go a little bit higher, which means they cannot do anything, or worse, they may have to reverse course and start tightening. And that's, I think, still a scenario that has to be played out and certainly not reflected in markets currently.
Yeah, Jerome Powell did say that inflation from tariffs could be transitory. So second time he's using this word. How credible do you think he's going to be this time? Yeah,
I was surprised to hear that word, to be honest. And I think a lot of people were. Like, everybody knows that connecting inflation and transitory is just risky, right? Because it may not be transitory. And you had a Fed speaker by the name of Goolsbee that followed about a day and a half later on a TV show saying, like, well, he sort of tried to explain, like, 1 month of data may be transitory, but 3 months of sticky inflation data, high inflation data is not transitory, right? So the Fed playing with a very tight rope here, right? A very, like, if you bring that out and you're going to say it's transitory, people think just literally like, which is not even going to experience anything from it, right? It's just going to be very quick, one-time effect, and it dissipates. But there's a worry about it that will not be the case. I think the news today, with just now these headlines from Trump earlier, by saying that these tariffs on autos will be permanent, will be staying in place, is an example of how you could drive inflation higher that way more permanently. Because, our autos is about 5% of the CPI basket, roughly, used and new car prices. So, yeah, it could have a permanent effect, and the Fed has to be very careful.
Yeah, so folks are watching the language of not just Jerome Powell, but also Donald Trump. And to that effect, we've seen some concern with investors pulling back. And you're watching market liquidity right now. That seems to suggest that we've got them at some of their lowest levels. How low are we looking at right now?
Yeah, there was some data out from, this case came from Deutsche Bank that calculated that. But yeah, we're really sitting in an environment where people are on the fence. They want this market to recover, right? Everybody wants to go back to more this great market that we had last year and the year before, but people are not doing anything, and they're trying to just figure out what these headlines really mean, and it's confusing, right? We're getting one day, I'm going to be lenient or flexible, and then now we're seeing actually headlines coming out that are much more stronger now about just plow ahead with these tariffs, right? No matter what, and we're just simply going to keep it going with tariffs. It's just different language, so. That's why the liquidity is so low. That's why people are not engaging and trading and doing things. They're just waiting until this really plays out. And we may not know on April 2nd. It may take several weeks for it to play out, particularly because, as Europe already announced, they have a decent amount of retaliatory measures ready once the tariffs are being announced. And so what will other countries do? And that's I think, the uncertainty as we go into April.
All right, so you've got a lot for investors to chew on. What's the playbook here for the rest of the year? Where should they be heading towards for safe haven, or even where to allocate their money right now?
Well, there's a few areas in the marketplace that you can think of. Like, for example, dividends have done quite well. It's maybe boring, but companies that pay steady dividends, high dividends, those stocks have actually outperformed. They've done well. Energy has been a good place. There may be weakness priced in the oil markets, but overall energy has actually done quite well because there's a lot of movement in energy happening currently because of the tariffs, I think. Healthcare, real estate to an extent, but also gold, obviously, right, which is always a haven asset. Interestingly, that on bonds, that has not been such a good asset, right? So it's not so much on that side. It's been more other types of sectors in the stock market and hard assets is, I think, the way to play this environment currently. What we're ultimately looking at here is just uncertainty about the tariff message itself. And maybe not the tariffs, the percentage, but more the message. Like, what does this really mean, right? What are you trying to achieve here? I think that is what causes the volatility and the illiquidity. and people holding back, and why these type of safe havens outperform for a period of time, where you may have to keep sitting in those until times change again.
Worth watching where gold is right now, above 3,000 near record highs on the back of all the uncertainty. We've been in conversation with Ben Emons. He is the Chief Investment Officer for FedWatch Advisors. Ben, always a pleasure chatting with you. Thanks for your time and insights.
Thank you very much. It's great to be on your show. Thank you.
Catch you again soon. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.